Hi everybody, so we're going to be going over the abbreviations today regarding the formula/metric system used in investments, investment properties, and we're also going to be covering the abbreviations and what they mean. So to start, we're going to be speaking about gross potential income. Basically, that is your imaginary gross potential. That's all it is that's your potential. If there is no losses, there's an operating, it's just your gross potential. It's grossly potential. It's potential gross. From your GPI, I added additional abbreviations. We have your GPRI and GPAI, which stands for gross potential rental income and gross potential additional income. And your GPRI plus GPAI equals out to your GPI. It's just kind of like additional math prior to having your GPI if you have to take into consideration the fact that you have additional income for one of your properties. And this is just an easier way to calculate it all together and to keep it orderly. So from your GPI, you are going to minus your vacancy credit losses, and usually this is called VCL, and it comes in a percentage. I have seen 5% VCL, 6% VCL, just to kind of give you an example. So you're going to minus your VCL from your GPI, and then that's going to give you your effective gross income, EGI, known as gross operating income. And this is your more realistic gross income, considering that there's vacancies and there's credit losses. And then from your EGI/GOI, you are going to end up deducting your operating expenses. An easy way that I remember to total out all of my operating expenses is I have the abbreviation TOE created. And basically that just means that once I calculate all of my operating expenses, TOE is my total operating expense. So it's just another way for me to keep it more tidy instead of having to have a bunch of random numbers everywhere. So once you've subtracted your TOE or OE, you're then going to arrive at your net operating income, and your net operating income is abbreviated into NOI, and this is what's going to help you get to your cap rate. And your cap rate is basically going to tell you your return value potential when you have your NOI, right? So you've deducted all of your operating expenses from your effective gross. You are going to divide your NOI by the price, or the purchase price, or the market price, whatever you're really basing your calculations off of, price and market wise. So for example, we're going to pretend like we already did our gross potential income. We've already calculated our VCL from our GPI, and now we want to figure out what our NOI is. So what we're going to do is we're going to add up all of our operating expenses. Let's say, for example, that we have $160,000 and we have a total operating expense of $60,000. So we subtract 160 minus 60,000, and then we come out to 100,000. So let's say, for example, that I am going to be purchasing a $1 million property. So I am going to divide 100,000 by 1 million. Okay, so you're going to come to your percentage, and that's what you want. That's how you get your cap rate. Your cap rate's a percentage. And when you get to that cap rate, so in this example, it would be 10%. 100,000 is 10% of 1 million. So your cap rate would be 10%. That's a good cap rate, to be fairly honest. It's a decent cap rate. You can do better, but you can also do a lot worse. I'd have to personally say, like in my own opinion and experience, like 6% is your average. I've seen people get lucky and get like 15%. I've seen higher deals go for around 15%. To me, when you have a higher cap rate, you typically are putting more money into it and there's higher risk. When you have a lower cap rate, you're not really putting as much money into it and there's not as much risk. However, I don't know about you, but I like to take a risk every now and again, and go for a better profit margin potentially. So in investments, it's really good to use this formula. So remember, GPI minus VCL equals EGI. EGI minus TOE or OE equals NOI. NOI divided by purchase price or market price or offer price equals out to your cap rate. And that's just basically it. That's the most simple, this way I can get into it. When it comes to calculating your operating expenses, you're not going to include your income taxes and a few other items. I'm going to link them here. However, when you're calculating your operating expenses, you just want to focus on what do you need to operate. Your utilities, your maintenance, your miscellaneous, your repairs, anything relative to operating. For example, and TOE just helps me remember what's the total of all of my OEs, which is operating expenses. So it's very, very, very simple. It's a little bit confusing at first. I've created a blog with more in-depth explanations for you guys. I just want to keep this video very simple and to the point, so it's not too confusing. So if you're going into investments, always have representation or a mentor, because if you don't and you're new, you're going to end up getting taken advantage of. People I've seen before, agents, they list properties, they don't really understand how to do the metric systems for investors, and they end up saying like operating expenses are $20,000, and in reality it's like $40,000. And a newer investor wouldn't really necessarily catch on to that. And if you have a newer investor with a non-experienced agent, then things can get a little bit messy. So if you need help with investments for anything, definitely let me know. I am in Florida and I am also in New Jersey. And in addition to that, I am currently switching over companies. I've been going through some ridiculousness with my Florida company, FHRM, and I am going to be focusing on more commercial investment in land developments and opportunities. So you'll be hearing a lot more about boring commercial information. Hopefully it's not boring to you guys, because I know I love it. So I hope this video was helpful. Please remember to share if you felt it was helpful, like, comment. I do these videos to help teach people, and your support means absolutely everything, and I am so grateful for all of you who show your support continuously, and thank you so much for watching. I look forward to posting more videos for you guys. BT dubs, you have another video a week coming up every single week. So every Tuesday there will be another new video for you guys. And I think I'm just going to keep that one to more of a get to know me, so you know who you're working with in the future, as well as who you're listening to. So thank you so much again, and have a wonderful, wonderful, wonderful rest of your evening. Over here in Florida, it is pouring down rain, and then I have my neighbors who are having a wedding and they did not invite me. I think they're playing like psytrance. I love psytrance and electronic music. Ugh. But anyways, thank you guys so much. Bye.